Good afternoon and welcome. You are watching Market Fatafat on 80 Now. I'm Nupur and with me is Rabinder. And together over the next half hour, we will take you through some of the stock picks. And also joining us on the show at this point in time is Osho from Angel One. Hi Osho, thank you for being with us. All right, and straight
Very
up
good afternoon, Nupur.
Hi. So straight up to the first stock that we've picked out for you today, and that's Colgate. Colgate-Palmolive India, of course, has seen a fall in its share price of more than about 3% in morning trade. Now, looking at the stock now, of course, it's bounced back a bit from those levels, but the stock was one of the mid-cap losers, really, though it had, as I was saying, has now recovered from those lows. Now, the stock saw a dip post its Q1 analyst call as Citi, CLSA, and HSBC have flagged the impact of higher brand and marketing investments on earnings and margins. Now, Nuvama and MOSL remain bullish, expecting premiumization and volume growth to drive faster revenue growth. The brokerage commentary, of course, that has followed Colgate-Palmolive after its Q1 FY27 results remains mixed. The company has reported a 7% year-on-year increase in net profit to 343 crores, while its revenue has risen about 11.8%. EBITDA has increased 6.7%, although the EBITDA margin has narrowed to 30.1%. And Osho, I think you've picked out Ashok Leyland. So what do you think is moving that counter today?
Very good afternoon to both of you. Well, yes, Ashok Leyland on technical fronts is looking quite positive. There has been although consolidation in the last 3 weeks, but after the breakout that we have witnessed around the zone of 165-68 levels, the counter has been sustaining on the higher end. So I'm expecting that with the kind of technical developments, there are multiple positive crossovers from short term and even on the long term perspective also. So I'm expecting that from here onwards, the counter has turned bullish. On the higher end, again, 178.79 is the first and intermediate hurdle. That should not be of any concern as of now because there has been already sustainability. So any movement above 179 can boost the momentum on the higher end. And the next potential target that one can expect from short to medium term is near about 196 to 198.
Okay, that was the view on Ashok Leyland. Now let's shift focus to Ahluwalia contract. Stock is under pressure after management in Q1 FY27 con call has cut the guidance. Remember that last week company has announced the Q1 FY27 earnings and it was the weak quarter for the Ahluwalia contract. And if we talk about the guidance, then management in the Q1 FY27 con call has cut the revenue growth guidance to 12 to 15% as compared to earlier guidance of 15 to 20%. And the guidance cut is mainly due to uncertainty around the NGD related developments, which could impact the phase of the project execution. And on the order inflow also, company has lowered its FY27 guidance to 4,000 to 500 crore as against the earlier guidance of 8,000 crore. And on the capex side also, the management has reduced their guidance. And if we talk about the brokerages, then Nuvama has maintained the buy rating while they have cut the target price rupees 1,004 as compared to earlier target price rupees 1,080. And ICICI Security has downgraded the stock to hold with its target price rupees 780 as compared to earlier target price rupees 925. So back of the weak earning, weak guidance from the management, stock is down more than 9%.
All right, Osho, I think you've picked out another stock for us, and that's Anantraj. So how are the technicals looking on that one, Osho?
See, overall, this counter has been into a bullish trajectory. There has been a strong higher highs, higher lows formation in the past 3 months, and overall, the counter has emerged above the long-term and short-term moving averages. So the technical developments are quite positive, and I'm expecting that with the kind of developments the counter have seen in the recent period, there is a strong potential for the counter to test the zone of 660 on intermediate basis. And if there will be any breakthrough above 660, then again the counter can see potential to move towards the zone of 700. So overall, there is a bullish trajectory in the counter, and any dips towards the zone of 600 can be seen as buying opportunity.
All right, so pretty bullish on that counter. The next one in news is Paytm. Now, Paytm shares turned volatile Tuesday in early trade, where there was a large block deal that saw nearly 1.92 crore shares change hands. That's equivalent to around 2.9% of the company's equity. Currently, of course, trading at about dips of 1.5% or upwards. Now, the transaction was valued at an aggregate of 2,949 crore rupees, and reports suggested that Resilient Asset Management, the parent and promoter entity of Paytm founder Vijay Shekhar Sharma, was actually looking to sell a stake in the company through that block deal. Now, it is believed that the Resilient Asset Management is looking to sell up to 4.98% shares in equity. And going back to Osho now, Balrampur Chini is another stock that you're looking at very closely, Osho. So tell us a bit more about the technicals on that one.
See, again, this counter has also been into a very strong movement, a bullish trajectory from the lows of nearly 420, 430 odd levels, and there has been kind of a vertical movement. Also on the daily time frame chart, there is a rounding formation, and with the breakout near the zone of 600, 615, there has been confirmation on the higher end. And in the recent period, the counter post testing the zone of 660 has retested the neckline of breakout around 600 and again have started gaining traction. So overall, all sums up to be a very positive development in the counter. And I'm expecting that with the kind of development the counter has been into, it might retest the highs. And I'm expecting that in the short-term period, the first intermediate target that one can expect is near about 680. And if it breaches the zone of 680, then again 720 will be the next potential target that one can expect in the counter.
Okay, that was the view on Balrampur Chini. Now let's shift focus to BSE Limited. Stock is under pressure after negative brokerage report when Nuvama has downgraded the stock to hold from the buy rating and cut target price rupees 3,240 as compared to earlier target price rupees 4,090, citing a weak outlook for the trading volumes. Remember that yesterday also Jefferies has downgraded the stock, and yesterday also the stock was down more than 3 to 4%, and now today Nuvama has also downgraded the stock, and Nuvama believe that the cash has reset index option volume to a new low with expiry date decay in trading dynamics impacting the overall volume run rate. And while BSE contract share is already at 51.5%, its AD PTV shares remain lower at around 36%. Primarily because of the lower contribution from non-expiry date tradings. Nuvama also flagged that the RBI guarantee norms, which are expected to start impacting the business from Q4 of FY27, while Q4 FY26 already provided a tough base for the comparison. So back of this negative brokerage report, stock is also down more than 1%.
All right, Osho, coming to you next. I think you've just picked out BDL, the stock, about 1.25% up in trade even as we speak.
Well, see, overall, the counter have seen a kind of a underperformance from the peer companies like HL from the defensive counters. But again, on the technical fronts, there has been a strong consolidation at lower levels. And with the kind of symmetrical triangle pattern, I am expecting that the counter is on the verge of giving a fresh breakout. So above 1400, the counter will have a very strong momentum. And I'm expecting that it might retest the zone of 1600 in a very short-term time frame. So this counter should definitely be in the watch list. The counter has emerged above short-term and even the 200-day simple moving averages, and there have been positive crossovers as well. So I'm expecting that in the near period, the counter can see some kind of a strong outperformance, and one should definitely try to gauge the momentum in the coming days.
All right, so Osho is expecting a breakout above 1400 on this one. We slip into a very short break here on Market Fatafat. When we come back, we'll have more stocks in focus for you, so do stay with us. Welcome back. You're watching Market Fatafat, a show where we look at a bird's eye view of certain stocks. And joining us, of course, is Osho. And Osho's picked out a counter that is buzzing in trade today. In fact, that one is Grasim Osho. So looking like a constructive technical setup to you?
Definitely, there has been multiple consolidation breakout in the counter, even on daily and positional front as well. So 3000 was the first breakout in the counter, and after consolidation between 3000 3250, the counter has again started some kind of a strong traction. So I'm expecting that this can be seen as a continued momentum in the counter. 3380, 3400 will be the next potential target that one can expect in the short-term period. And now the consolidation range is somewhere placed around the zone of 3250 and 3400. So buy on dips will be the approach for the counter, and any breakout above 3400 can again provide some strong momentum. So overall, the counter is into bullish traction. Any dip towards 3250 can be seen as opportunity to accumulate. 3400 will be the positional targets.
All right. So the next counter that we've picked out for you is Sirma. Now, Sirma stocks are among those that have risen among electronics manufacturing services companies. Now, this has happened because the government has approved about 31 fresh proposals under the ambitious Electronics Component Manufacturing Scheme, or ECMS 2.0, that involves investments of around 7,877 crore rupees. Look at that counter, up nearly 2%. Now, the approvals, of course, have come in as India is looking to deepen its domestic value addition in electronics by strengthening local supply chains, reducing dependence on imports of critical components, and building advanced manufacturing capabilities. It is in line also with the government's broader goal of positioning India as a global hub for electronics manufacturing. And in fact, speaking to ET Now, Sirma SGS MD JS Gujral said that the company's 60 crore coil approval is a strategic fit. He added that Sirma SGS has received 18,000 crore of capex approval under the ECMS scheme. Listen in.
The window for the ECMS closed on 15th of September 2025, if my memory serves me right. And the first tranche was sanctioned on 27th October, where we got the PCB approvals. So in about less than a year, the government has cleared almost all the applications. And whatever we had filed, it has all been cleared. So I think it's now the heavy lifting for the industry begins now. Now, overall, under the ECMS, we have got approvals for about 1,800 crores of capex. The PCB plant capex is on time. The building is almost complete, and we expect to start trial production by March of 27. But this plant should start producing by around this time next year. And next 2 to 3 years, it should sort of attain full capacity.
And the next stock in focus is HEG. Now, that stock has surged close to about 6% today, and it's trading near its 52-week high, extending a strong technical breakout, Osho.
Definitely, the counter has been into a very strong vertical momentum, although I picked the counter near about 710, 720 kind of a zone, and from there onwards, the counter has already seen a strong breakout. On the monthly time frame chart, there has been a rising channel breakout in the counter, and I am expecting that with the kind of momentum the counter is into, 780 should be the next potential target, but at the same time, the technical parameters have turned to be overbought. So one should maintain a cautious view. If someone is already holding position, it will be advisable to trail their profits at these levels. 710, 715 will be the trailing stop loss, and 780 is the first target that I'm expecting this counter.
All right, Osho. Appreciate you taking out the time to join us on Market Fatafat. Thank you. Moving on now, integrated gold and silver platform Augment Enterprises is headed to a primary market with an 825 crore rupee IPO. We caught up with Ketan Kothari, the whole-time director of the company, to understand the company's business model, how it plans to deploy the IPO proceeds, primarily towards working capital and inventory expansion, and its growth roadmap after it lists. Take a listen.
Augment has been recognized as India's #1 gold and silver platform. We are a completely integrated gold and silver ecosystem. The idea behind Augment is that we use technology and we solve all gold-related problems. Just to start with, we have the Augment Spot platform, which was started because the markets were fragmented. The price discovery was not there. There are no live prices for the spot market, and there was a lot of ambiguity. Everything used to happen on phone-based trading, and for every one trade there used to be like 10 phone calls. The spot platform caters to 5,200 jewelers across India. We have 20 delivery centers in 13 odd states. The jewelers, they buy their physical gold and silver requirement on a daily basis from the spot platform. The technology of the spot platforms works in a way where, unlike an exchange where there is a matching engine, in the spot platform, the counterparty is always Augment. So hence, all the transactions that happens on the buy side or all the transactions that happens on the sell side, Augment is the counterparty for all of them. And that's a premise of the Augment Spot platform. Besides this, we have the consumer-facing platform. Again, the idea was to complete the entire life cycle of gold for the customer. The customer should be able to manage their gold requirements through one single application, which is phygital in nature. So we have the Gold for All platform where customers can do investments, They can do monetization of their gold. They can leverage against the existing gold. For this, we have our own application. We have integration with 218 fintech partners. We have around 49 million customers on this platform. We also have retail touch points, which is around 4,690 retail touch points across India, including 106 Gold for All stores, where customers are able to do everything related to the platform. So all in all, the idea behind Augmon is to let the customers be inclusive. All the customers can do everything related to their gold and manage it on a single platform at ease.
Sachin, give us a sense of the fund use that you are going to do, because you're raising 620 crores in primary. What is the kind of use for this fund?
So thank you. So before I get into that, let me explain to you how a particular transaction works on the spot platform. A jeweler, when wants to buy on the spot platform, first have to deposit margin money. After depositing the margin money, he can start buying gold and silver on the spot platform. When a jeweler is buying gold on the spot platform, I have to back-to-back book it from my vendor, the supplier. And the jeweler has to make the payment within 2 days. Now, within these 2 days, I have to make the entire payment to the supplier, make sure that the gold is put in transit to the delivery location where the customer wants it. So that is where my capital is required. So I have to block my capital for those 2 days and source the gold and deliver it to the customer. Customer makes the payment and then the gold or silver is delivered to the customer. Now, as mentioned in the RHP, the object of the issue is to utilize the proceeds above about 465 crores for the working capital requirement of the business. We need working capital for the same reason as I explained, for sourcing the gold and putting it in transit for delivery to the customer. So the main object of the issue is towards working capital.
Sachin, you spoke about the fact that there's a margin that needs to be paid upfront. So how much of the total margin percentage is paid upfront by the jeweler who's trying to buy a gold? And when you are, when you are buying the gold from a third party, how much you have to pay for that?
So the margin paid by these customers range between 2 to 5% depending on the volatility. Whereas when I'm sourcing the gold from the customers, when I'm sourcing the gold from the supplier, I have to pay the entire money to get the delivery of that gold.
And so within 2 days, the jeweler has to pay you the entire amount, and so you need this working capital requirement is for 2 days in that sense, right?
Yes. So my current, if you look at the RHP, my current working capital cycle is of 1.76 days.
Well, that, of course, was the Augmon top brass speaking to us on ET Now as their IPO hits the street. And in fact, that's all the time we have right now on Market Fatafat. Thank you very much for joining us.